All right, well, Julia, thank you. This is amazing, and it's so great to see how this event has moved forward. And I just, yeah, thank you for everything you've done with Good Money Week. It's been an absolutely extraordinary adventure, and to be on the 16th Good Money Week, I think formerly National Ethical Investment Week was how it started, and it's evolved and adapted over the time and over the years. And this year, we're so pleased that we've got, I think, 15 different events as part of Good Money Week, and the idea was always to create Good Money Week as this umbrella that brings together different parts of the industry, people that are directly retail-facing, people that are working with other parts of the industry that are retail-facing, working to serve and support and share information, guidance, advice on how best to work with retail-facing organizations and how to work with clients, through to engaging people directly in understanding thoughts around how they can be more sustainable with their finances. And so, for example, we have Good Money Sunday, which is taking place this weekend, and there's a whole bunch of work happening in churches across the country, learning about sustainable finance. That's one of the other parts of Good Money Week that people may or may not see. So there's incredible things happening, and it's a really exciting week. So we're really pleased and grateful for, Julia, all the work that you've done to make this event so successful, and of course, continuing to convene this conference, which, as you say, gets bigger and better every year, and now we're here in this amazing venue. You're absolutely right. From up here, this does feel very strange with this going around. What's been happening? So it's been, I think, one of the most interesting years that we've had in this industry for quite some time, not just on the political side, but also, of course, on the regulatory side. And I have no doubt we're going to hear a lot about SDR as the day goes on. But just on the politics, obviously, we have a first Labour government for quite some time. We had a change of government. We spent a lot of time working with parties in opposition, so that included the Lib Dems and the Labour Party, trying to influence their policy thinking in the run-up to the election. And we're actually really pleased that we managed to get quite a lot of things into the Labour and Lib Dem manifestos. So the Labour Party published a document that you really should look at. It's their financial services plan. It didn't quite get referenced in the manifesto, but what we hear from civil servants is that they are very much taking it seriously as a guiding document for how they want to move forwards on financial services. And there's our chapter in there. I say chapter, it's 2 pages, on sustainable finance. And we spent a lot of time feeding into that, and that, I think, will form part of the blueprint of how Labour might look at sustainable finance from a regulatory perspective over their term. So what we already know is that ISSB adoption is being accelerated. The task force that was set up under the last government, which was designed to be a kind of heel-dragging, go-slow task force, is being accelerated. They've been asked to speed up, and so I think we might see ISSB adoption pretty quickly. Transition plans, of course, we've talked about. 1.5-degree transition plans was in the manifesto. I wouldn't be surprised if that moves forward pretty fast as well. There's, of course, question marks about whether 1.5-degree transition plans will work. And the other part that was in the manifesto that might scare a lot of people in this room was every regulated financial services firm should have a transition plan, was what was in the manifesto. I suspect that a kind of 1 or 2 person financial advisory firm is not going to be top of the list to be required to have a transition plan, but it would be interesting to see how that goes, and where the thinking is moving on that front. I guess I've just come back from Labour Party conference, and we had people until yesterday on the ground at the Conservative Party conference from UKSIF as well, and I think it's fair to say that I'm a bit disappointed with where sustainability is landing on the kind of hierarchy of priorities for the new government. It definitely feels like growth is the #1 priority. And what I kind of had in mind when I was thinking about growth was creating growth by becoming a more sustainable economy, by moving towards net zero, by delivering the industries of the future. There's still some of that narrative, there's some of that thinking, but I think it's also merged more into just creating growth, attracting investment in anything, attracting investment in any industry. We don't care what it is, as long as you bring investment to the UK. And that I find quite concerning. And actually, I find it almost, without a clear government vision of what sort of growth we're looking for, it makes it harder for people to invest in this country because there's no clear unifying purpose of where we might get to. So I'm pushing the party, the Labour Party, and the government now, to continue this focus on sustainable growth. Let's create the net zero economy. Let's move forwards in a sustainable way and attract lots of private capital from people around the room and others to do that. That's also work that we're seeing around pensions. There's, of course, a pensions review ongoing at the moment. I think we all know that pension funds is a kind of key crisis area of the future in terms of the amount that people are actually saving into their pensions. I wonder whether the government's going to focus on that. They have a review in 2 parts. There'll be a pensions bill in Parliament this year. I think that's jumping the gun. I think they're far too early to do that pensions review. I think they should wait, do the proper review, and then get a bill in Parliament. But there we are. That's what's happening. So we'll wait and see. We're also concerned by the lack of reference to sustainability in the questions that they're asking around the pensions review that's happening at the moment. So lots to do. We definitely are not in a place where we've got a government that cares about sustainability and therefore we can just sit back and relax. We've got to work really hard to push the government to show that sustainable finance, that investing in the sustainable future is the way that we can go and that we can create the strong growing economy that the government wants to see on the back of that. Of course, on the regulatory side, we've got SDR. You've got Sasha Sedan speaking shortly, later this morning, I think. And I'm sure you will ask him a lot of hard questions, and I see Miranda's definitely going to ask him hard questions. SDR, I think, has not been moving forward in the way that we'd expected. We think that it's a strong policy. We've worked really, really hard, and Julia and others on the Disclosures and Labels Advisory Group as well, to create a framework and a structure for SDR that we think is really exciting. The implementation, I think, is challenging. And I think that there's a lot of work needing to be done on the implementation, but I think there are now 10 labeled funds out in the market. That's nowhere near enough. And so we want to see lots more funds becoming labeled over the coming few months. So yeah, that's where we are in terms of some of, and of course the anti-greenwashing rule, that's another big part of the regulatory landscape, as well as new regulation on investment index providers, sustainability index providers, and I would suspect that there might well be regulation on investment consultants coming at some point as part of the pensions review. So let's see where some of that lands and how that moves forwards. So as ever, for Good Money Week, we've done some public polling, which I want to share with you some of the results of. It's a bit of a mixed bag, and I'll explain why as we're going through. But we've asked some questions that we've asked the same. So we've been asking one question since 2009, the exact same question. We've asked that again, and that'll be right at the end of this set of slides. And we've asked some new questions and then some similar questions. And I'll just run through where the public is at. So this is a proper poll. It's done by YouGov. It's over, I think, 2,000 people in the UK were asked their opinions on various things. And here we go. So first question was, thinking about your values, in what ways do you want your investments and savings to make a positive difference to the world? And so around about 80% of people said they want to make a positive difference around climate change and the environment through their savings and investments. 69% of people on animals, nature, and biodiversity, and then around about 65% on working conditions and human rights. This is a staggeringly large numbers. Almost no poll of that many people is going to come up with a number like 80%. This is, and you can say pretty much everybody in the country wants to see their values around climate change and environment reflected in their savings and investments. And this is really important and really exciting. And I think it does show two things. One, that the public does care. I think we hear a lot about, people don't care about climate change. People just want to move on with their lives and not have to worry about this. People do. They do. They recognize that where their finances are invested has a significant contribution to their overall carbon footprint, impact on the world, and people want to make a change around those things. And I think it does, in my mind, give a strong credibility to those of you working really hard to get SDR labels that there will be clients and customers for this if we can promote it and talk to people about it in the right way and educate people that these exist. Are you comfortable or not comfortable with your savings or pensions being invested in companies which are treating their workers badly? So 82% of people net are not comfortable with their investments helping treat workers badly. That's a slightly different question to what we asked last year, but last year was about 70%, so that's increased. Similar sort of vein, are you comfortable being invested in companies which are treating their customers badly? Again, about 82% of people saying they are, saying they're uncomfortable with their savings being in those sorts of companies or investments. Slightly different one on the environment, in the environment and climate. Here it's a slightly lower number. 68% of people are uncomfortable net with their companies, with investments in companies that negatively impact the environment and climate. What that means is there are 8% of people that are comfortable with that. And I want to know what these people are. I want to have a conversation with these people and understand the thinking around, what do you think you're doing? But certainly there is, still strong numbers of people that are saying that they are uncomfortable with their investments being in things that are harming either people or the environment. Are you comfortable or not comfortable with your pensions investing in companies which are helping to solve environment and climate change issues? 71% of people very comfortable with that. So people want to be invested in the solutions to that. The neutral line is a bit bigger here. I think people are unsure. There's quite a lot of uncertainty, and as we go through, you'll see that there are certain questions where people just do not know the answer. And it's something that we as an industry need to think about. Why are people unsure of the answers here? And then here goes, do you think that pension funds that only invest in environmental sustainable businesses perform generally better or worse than those that include environmentally unfriendly? This is an example of complete uncertainty. 54% of people do not know the answer to that question. And so again, I think we need to think about our messaging to a retail audience and help people understand some of what we're trying to do. So here we've got actually in terms of performing worse, you've also got quite a sizable number. 21% of people overall think that it will be somewhat or significantly worse performance if you're investing in climate solutions more. Would you support or oppose UK pension providers to stop investing their pensions in the oil and gas industry? This is completely split into three when you take these kind of bars together. So strongly or somewhat support, 36%. Strongly or somewhat oppose is 31%. And don't know is 34%. Roughly a third, a third, a third. And so there's no clear answer to that question at all. People are very, very evenly split on that. And I think there's some really interesting thinking. I don't have any answers about what we might interpret from some of this, other than it's interesting to see that this is what people are thinking. And so we said to those, so we asked those people that said that they would support stopping investment in the industry, and we asked them for that subgroup what time frame you'd like to see that. You might think that people would say immediately. Interestingly, they didn't en masse. 22% said immediately, get out, divest immediately, but actually 37% said by 2030. So there's this kind of feeling that people think that there should be a ramp down rather than immediate cutoff. So it's interesting, from some of the divestment movement and others, you kind of hear, no, get out immediately, get out straight away. The public as a whole, I think, are not quite so in that category. And then we said, what would which of the industries would you most like to see your pension fund invested? We gave people a chance to pick three here. And there's three obvious winners in this. Renewable energy, by a mile, 39% would most like their pension fund invested in renewable energy. Healthcare and then technology on 33% and 26%. You'll see interest in the oil and gas second from the bottom, but the lowest down one is mining and metals. Now, clearly it's an industry that gets a really bad rep and for extremely good reasons, but it's also interesting because that's an industry that needs to continue if we're going to be digging up tons of lithium to make electric batteries. So there's a really interesting kind of dichotomy about the mining industry in particular, and there's very strong reasons why people are very opposed to it, but also it's clear that it's going to be required as part of the economy going forwards. So this is a question we put in because we know that there's some talk about putting mandates on pension funds to invest more in the UK. There's already some of the Mansion House Compact and frameworks. We're quite nervous about this. We think that there's a slippery slope when you start telling pension funds what to do. It could potentially get into a very slippery slope of where you end up with that, depending on who's telling them what to do. And we've obviously seen in Texas, pension funds have been told to do things that we, I imagine most people in this room would strongly oppose. And so we asked this question. But it turns out that the public are not generally as opposed to mandates for, or where they want their pension to be, or being told what to do, perhaps. 44% of people would mostly like their pension to be invested in the UK, compared to 7% of people that would like to see it mostly outside the UK. So there's some really interesting, again, thinking about where pension funds are currently invested and where the public would like them to be. There's quite a big disparity there. And again, I think a lot of that comes down to education rather than comes down to people's real views. A couple more to go here. So thinking about your financial investments, has your employer or financial advisor made you aware of environmentally sustainable products available? This is a really worrying number, and it continues to be worrying. So if you take out the not applicable, you get 73% of people that have not been made aware Last year, that was 69% of people, so that's increased slightly this year. People do not feel they've been made aware, either in their pension fund or by their financial advisor, of the sustainable options that they have available. And I think that's something, again, as an industry, we need to understand what's going on here. We need to understand why people are not feeling they've been made aware, and why people are feeling that they haven't been given these options. In fact, there's another question we asked, which I don't have in this deck, which is 60% of people do not know whether their pension or investments are environmentally sustainable. So people are uncomfortable with a whole range of things, stuff that we would consider maybe bad stuff being in their pension fund, but 60% of people don't actually know where their pension or whether their pension is environmentally sustainable. So yeah, it's an interesting mixed bag here, and I think it gives us a lot to think about and reflect on as an industry. I don't necessarily have all the answers. This is my final sort of slide on these polling numbers. Now, we've done this question since 2009. As I say here, every year, I'm still not very comfortable with the way the question's worded because it presents it as a dichotomy. You can either have financial returns or you can make a positive impact. We know that dichotomy isn't necessarily realistic. But in 2009, when we first asked this question, the blue line at the top is the one you really want to look at. Almost 80% of people said that they're only or mostly interested in whether their investments make money. Compared to the line right at the very bottom, the pink line, I'm only or mostly concerned in whether my investments make a positive difference to the world. Now, over a long period of time, through to 2020, that line of people that only wanted to make money has gone down substantially. But look what's happened, it's ticking back up. And clearly we've had cost of living crisis. We've had people feeling much poorer. We've had people feeling the pinch in their wallet and thinking about money much more perhaps than they have been in the past. We're now up to 55% of people from this year's survey that only or mostly want to make financial returns. Let's hope that trend doesn't continue. But again, we've got work to do, guys. We've got a lot of work to do to try and talk to people about what's going on, what we're doing, why sustainable finance is important. That's part of the point of Good Money Week, but it's also something that we need to do more effectively because this chart is going to continue to ramp up if we're not careful. And so then that links just very quickly towards the end. We're doing a piece of work, and we're about to publish a guide, which we'll be very happy to share with everybody, called How to Talk to Your Clients About Sustainability. Now, that's based on a whole bunch of other polling that we've done, including some of these numbers and others. And we've got 5 kind of key recommendations in that guide, one of which is, let's use plain English. Half of people have not heard of ESG investing. Whereas 80% of people have heard of sustainable investing and 79% of people have heard of responsible investing. So let's use that because those are phrases and words that people understand. ESG, I think, is an acronym that we should try and start avoiding as an industry. It doesn't resonate well, and it's because half of people do not understand it. What we've seen in America, it's actually very interesting. In America, almost everyone has heard of ESG and ESG investing, but almost everyone thinks it's bad. And that is because it's not the financial services industry that's taught them about ESG, it's the anti-ESG lobby that has taught them about ESG and told them this is something bad. So if we're talking about ESG to people that have not heard about ESG, it is wide open for someone else to come in and say, this is bad, stop it, this is woke finance at its worst. We need to make sure we're not falling for that. So we need to start using phrases like sustainable and responsible, which resonate well with people, because even of those 80% of people that have heard of sustainable and responsible investing, 80% of people are favorable towards it. So let's talk about the things that people know, and let's talk about the things that people approve of and are favorable towards. We need to educate our clients, but our polling shows that they're eager to learn. So we can't green hush. We mustn't be green hushing. We've got to talk about this. Clients are aware of sustainability. They want to reflect it, as you've seen, but they don't always know about it. I'll be very quick. Thirdly, avoid being sensationalist. Let's focus on the things that are not polarizing. Risk is definitely one of those things. Let's focus on our strongest arguments. We've got to build the case. We've got to focus on the topics that our clients care about, which overwhelmingly is climate, but other things are also there. And then finally, dispel mistrust. We've got to be wary of greenwashing. The public are wary of greenwashing. We've got to make sure that we're whiter than white in that sense. Align our marketing with our product teams and being as transparent as possible. So that's the guide that we're coming up with. We'll share it around once it's published in a couple of weeks' time. But yeah, big year ahead and lots to think about. So thank you very much.